Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing while also documenting their own personal investing journeys are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys, Ryan and Corey, here with another episode for you. Today was an unbelievable episode. We had a charismatic ball of energy on the show. His name is Mark Kohler. He is a real estate, well, not even real estate. I would say he is a small business CPA attorney, and he basically runs a business teaching people how to set up their legal structures for their businesses and then asset protection, as well as tax planning, all wrapped into one kind of entity. But he is a true master of his class and of his craft, I should say. And I followed Mark for probably, I'd say like 4 years on YouTube. He's up to like 430,000 subs on there because he breaks down and demystifies what it really takes to set up your small business entities, like your LLCs, your S Corps, your Incs, and then also run the appropriate tax planning through them. And a lot of things that get confusing and boring, Mark makes them fun and not confusing.
The key subjects here: taxes, legal, wealth management, estate planning, and asset protection. Those five. And we said it through the episode. Mark made it sound like fun. Like I was energized because he's so passionate about it. And it's literally like not boring anymore to me. Cause it's funny. We've had some people DM us and they're like, I never was interested in learning about taxes until I started running a business. And now I listen to your podcast when you have a tax professional on. This episode is all about the structure of your business and like S Corp versus trust and, where holding company, which side, operations versus pass through. It's like, he literally took out a whiteboard, and that's why we want you to watch on YouTube, listen to the podcast, but then also go over to YouTube. And he took out a whiteboard and drew exactly where all these elements, like how they should intertwine and how they should go. And it was a shorter episode. Mark was short on time today, but you get more out of this 40 minutes than I can't even tell you. Like it was perfect.
It's about the two things I want you to remember from this episode are legal structure for your business and asset protection. And that's what he really goes into. And we haven't covered that in a lot of other episodes. It's not all about the taxes. And we've had CPAs on the show. He teaches you how to start the entities for your business and create the appropriate structure. So that way, when you do have a ton of money flowing in, it's set up appropriately and you'll save on taxes when that time comes. And I don't think I could say it any better than Corey. Like this guy is just a ball of energy. He makes it fun for a very boring topic to many. We were juiced the whole episode.
Yeah, we basically already agreed to wire him money for him to help us, but it's not actually that expensive too. And that was one of the things that he mentioned is like, you can do some of these things for $500-$600, $1,100, $1,500 for certain things, but like he's got a full operation and team in place, and yeah, he makes it. He really made it fun for us.
And if you have already created things and may have messed them up based on what you're hearing,
you don't have to redo the whole thing.
You don't have to redo the whole thing.
Exactly.
And you can change ownership and things that I thought weren't possible. They can basically go through and clean up everything for you.
Yes. So we're gonna bring Mark in. He was incredible. If you're listening, 5-star review, people. That'd be nice. That'd be real nice right about now. If you got 5 minutes into this intro, 5-star review. We've said it on a couple episodes. Goes a long way. I've already said it. Come on, leave us one.
Two more then.
Two more.
We are going to be going heavy on YouTube. And we already kind of have been posting things, but a lot of shorts are going up there now. But a lot of our content moving forward is going to be not only an episode Wednesday from the podcast, but Corey and I really want to give more value out in things that we've learned over the last 4 years. So we're going to be recording smaller bite-sized videos. Let's just call it 5 to 10 minutes long that give you how to do things. The fluff is cut out from it. And, examples like this, things we've learned from Mark, things we've learned from all the other masters of their class. We're going to teach you what we've learned. And in turn, the next thing I want to talk about is we'll tease this now. We are working on a coaching program that you can work one-on-one with us, wealth building, debt reduction,
personal finance,
passive income, it's going to be wealth, mindset, and what was the last
personal
one?
Finance and life coaching. Yeah. So basically like all the things that have helped us build our wealth over the past 4 years, we want to dive into your personal financial picture and help you do what we did, like through the knowledge that we have. And I feel like the way for us to give back the most amount of value is to dive in individually to people. And that's what we have planned for next. We teased it on our Instagram a couple weeks back, but this is the next phase of Ryan and Corey here.
It is. And I think a lot of people will think, well, why us? Why that? We have had a lot of people asking us to share more about our personal story. And hey, where are you guys actually on your journey? Like we don't really mention this much to people. We like kind of semi keep it private, but all of the things we've done in the last 4 years have put us on target to become millionaires in our early 30s and have the ability, if we would like to, leave our W-2 jobs. And it's just it's an interesting thing where it's not to brag and put all of our information out there. It's to say the proof's in the pudding. We've learned from others, and now we're trying to give back even more than we have in the past. It's been a lot of free game the last 4 years. Now it's like, hey, if you want to work one-on-one with us and trim out all the fluff, we're going to put that together in a nice package for you. And we love helping people. We're curious. We want to know people's situation. And if you've taken a liking to us and you see what we've done and you resonate with it, then maybe you're a right fit.
100%. First, before that, because maybe by the time this episode airs, it might actually be live, or we're very close to rolling this coaching program out. But first, listen to Mark. He's incredible. Let's bring him in.
Let's do it. Having purchased investment properties as well as primary residences, we know how daunting it can be to find a reliable lender to secure financing for real estate in the market today. With the up and down of the market, high interest rates, and the complexity of the process, honestly, it can feel like a lot. So to help out our community, we decided to bring on probably the most important person or one of the most important members of our personal real estate investing team onto the show to help out our listeners. Our mortgage lender, Travis David of CMG Home Loans, has agreed to educate our community and assist anyone looking for real estate financing. Whether you're a real estate investor looking to fund your next project or simply looking to purchase a primary residence, Travis will be able to help you and point you in the right direction. So he provides each of his clients with a tailored roadmap designed to guide them through purchasing their first investment property and strategically scale their portfolios over time. So if you're looking to either purchase your first residence or maybe second residence, but a primary residence, or invest in real estate, Travis is your guy. Visit our website at www.juice-enterprises.com/need-funding to book a call with Travis to explore all the loan packages that him and his team currently have available. He'll also help assess your current situation and will work with you to map out a plan for the future. So just remember this, we can all win. This is an example we really wanted to help out our community and something we find people are lacking in a daunting process. So if you are looking for real estate financing, we have your back. Make sure to visit our website and Travis will take care of you. Have you been struggling to close more real estate deals? Maybe you're a flipper, wholesaler, or simply looking to purchase a long-term rental property. Having done our fair share of investing and deals over the years, we've learned just how difficult it can be to find high-quality leads and motivated sellers that you can work with. To help solve the problem for us within our business, we hired a team of professionally trained cold callers at REI Call Center who make up to 2,000 calls for us per day. They not only nurture leads that come in, but they also add the leads directly to a CRM, which is known as a customer relationship management software, for us to manage so we can keep everything organized. To take it a step further, they also set us up with a dialer, weekly training calls, and a file vault of documents including scripts and contracts. So if you're looking to take your real estate business or investing portfolio to the next level, visit our Instagram page, our handles @weeklyjuicepod, and click on the link in our bio to book a free 15-minute discovery call with REI Call Center today. Quick public service announcement for all of our listeners. First off, we want to thank you all for tuning into the show, not only this week, but we've seen you coming back episode after episode. And one thing we'd really like your assistance on, if possible, you know that our content's free and it takes a lot to pump this out every week. We're really looking to enhance our overall reviews on the show. That can be on Spotify, but mainly we are looking for Apple Podcasts. If you could please leave us a 5-star review, that will go so long and so far for us. Really, when people are looking to get on shows, they look to see how many 5-star reviews that show has and the number of reviews. So if you haven't left one, please just click on our show. You can scroll down to reviews and then leave the 5-star. Even if you can write a little blurb about us, like what maybe has helped motivate you or anything that is relatable to your life, that would go such a long way for us. And then in turn, it allows us to get high quality guests for future episodes. So if there's been a motivating episode that you can really think back to and that has really helped you in your life, please leave a review because we'll be able to get someone like that on the show in the future to help someone else out. So that would be very much appreciated. And we look forward to continuing more episodes for you. Mark, officially welcome to the Weekly Juice podcast. I know I speak at least for myself, but also for Corey, we are highly honored to have you on the show. I've been following you for a very long time. You've helped us, whether you know it or not, get our business off the ground, from legal structure to asset protection, LLCs, all the above. We've watched your YouTube channel. It's amazing and super helpful. So it's going to be amazing to bring you and your knowledge to our audience. So thank you for joining us.
Oh, thanks for having me. I just love the real estate community, investment community. I own rentals myself. I think tonight I got to stop at one of them and do a little handiwork. That's my free time that I love to, build something, screw something up, go to Home Depot and get great advice and then jack it up. But I'm excited to be here with you guys, and it's a total honor. Love what you're doing in the community.
Thank you. So let's start, maybe not day one, but take us to your professional life, like how you kind of started getting into asset protection, CPA, all of the above, and kind of walk us through your story so we can get a little background on you before we go into your expertise.
You bet. So back in the 80s, rocking the 80s, I saw the movie Wall Street with Michael Douglas, and I was like, that's what I want to do. I want a big business, corporate tax lawyer, mergers, acquisitions, takeovers. And so I was kind of my dream. So I went pre-law, went through undergrad. I thought the language of business was money, it was accounting, it was numbers. You got to know the numbers. That's the person at the table that controls the discussion. And so I went through the accounting route, and then off to law school, got my CPA exam. And through that process, I realized all those years I grew up in a small town, was a little entrepreneur myself, had my first house hack when I went to college and rental properties. I was like, I freaking hate Wall Street. I want to help Main Street. And so we were determined to go start our practice in a small town. But then after serving the 25 business owners in a small town, I got to go nationwide. And so I started writing books, started my own podcast. I was doing YouTube over 15 years ago, and just when it was just a thought. And so I'm not old. I know you guys think I'm in my 30s. I work out, but no, I went through that whole process and started to build a brand. And our law firm has continued to grow and just help clients around the country that are the basic bread and butter small business real estate investor, Main Street America. Just love it. And that's just been my calling, and I know my purpose now. And it's just been freaking awesome.
I got to tell you, it is your calling. It is your purpose, because I love your humor, your jokes. Like, I'm telling you, I'm a fan. Like, getting to talk to you it's awesome. I called the law firm. I was like, dude, I need to work with Mark. Like, dude, buddy, there's a wait list. I'm like, okay. And they said it very nicely to me. And I know how this thing works now. We're a little bit more seasoned, but I'm saying this because from a place of goodness, we're just thrilled to have you here, man. And I know that everything you let us know is going to be a gem for other people to take advantage of. So maybe you could give us a little background, not really background, but tips and tricks for entity structure when people are starting their real estate portfolio. We've heard a lot of different things. Should we have an LLC per structure that we take on? Or should we, maybe just have one business that runs everything? Take us through maybe like a mold of a small business owner.
You betcha. And it's actually quite easy. This is going to be, frankly, a revelation to many of your listeners. I know you're familiar with it, and it comes down to one word: the trifecta. The trifecta is the visual representation of how every small business owner, frankly, I've got clients that are worth 100 million that are like, Mark, I need my trifecta updated, and we'll have phone calls. The trifecta is a picture that brings together your operations, your assets, and your wealth building all together. And that trifecta is so simple, it's so elegant, but so complex. And it's in the sense that you can do so much with it. So when a client says, hey, I need to save taxes, I'm like, all right. Oh, I want asset protection, or, oh, I want to do a charitable trust, or I want to just my estate plan. It all fits in the trifecta. So you want me to reveal? You ready?
Yes, please.
Ready. I mean, it's drum roll. Don't we have audio for that? I'm just joking. All right. So the base of this is your legacy. That's your estate plan. It's your revocable living trust. If you're worth 100 grand or 200 million, I do not care. You're going to have a revocable living trust as the foundation, which can allow for privacy. I don't want the Mark Kohler Trust. I want the Green Tree Trust. We're going to try to hide our assets as best as possible. That's not true, pure asset protection, but it helps create privacy in our digital age. So we want to use this trust as the foundation to leave our legacy, our business continuation plan, teach our family, our children, what are we going to leave them, and are we going to be organized in the way we do it? Then as that foundation goes up, on the left side is our operations. That could be from a side hustle, driving Uber, selling something on Etsy, influencing a product, a service, a landscaper, a contractor, a realtor. We're going to have that operational side on the left that doesn't have any assets. It's a machine, it's a shell. And it may start out as an LLC, then we're going to convert to the S Corp when the time's right. And we're going to do tax planning, get our family on the board of directors, pay my kids, use home office, use travel and dining and equipment and electronics. And I'm just going to make freaking money. And in much of your world and your listeners, that would be the fix and flip side. That would be the development side. That'd be the construction side, the realtor side. So I'm going to be wholesaling, making money, but then I'm going to plow that money as I make profit in a tax advantage way over to the right side. And the right side's my asset side. I'll maybe start with some tax-free buckets. I want some 401ks, some Roth IRAs, some health savings accounts. I'm going to be building that self-directed platform. I want to be doing real estate in my retirement accounts. So I'm going to get a tax deduction to fund more real estate tax-free. It's insane. Then I'm going to have my own personal real estate portfolio. We want both because the tax flow through losses of long-term rentals, short-term rentals, self-rentals, those are going to be really, really powerful. And whether or not I'm a real estate professional, there's some loops and some tricks there. So the right side is our assets where we decide, do I need one LLC or 20 LLCs? Or what does that look like? And it's going to be, and we can get there, right? But that big picture of assets on the right, operations on the left, and it all flows down like water to your 1040, to your trust. And that three-legged stool is what wealthy people do. They get it. They're going to build a legacy. They're going to build an empire. They've got to be able to visualize it, see it, and manifest it. And it's so simple. And it helps us decide our tax strategy, our asset protection strategy, and our legacy and that wealth.
Mark, this is awesome stuff. I want to commend you on how succinctly you put that together for us. But my question for you is, so you're saying you don't really, it doesn't matter if the person that you're working with has two properties or one business that they're just starting, or if they got 100 million and you want people to set this up from the beginning. And if that's the case, can you just explain why? And the reason why I'm asking the question is I've heard that it's like, you don't really have anything to protect. Just go out there and start to build it and then worry about it later. Is that the opposite approach that you would have with somebody that you're working with who's trying to get something off the ground?
You bet. And this trifecta, you can overlay and organize and clean up anybody that's further down the road or set the framework for someone that's just starting on their journey. So the trifecta, you'd be surprised how many clients you think they have their shiz together, making 50 mil and 30 doors or this or that or whatever. And you get to them and they're like, they're a train wreck. Their accountants are speaking 3 different languages with their lawyers and they're frustrated. And so that trifecta, so this is the first point, whether you're young, old, rich, poor, in the beginning, at the end, the trifecta gives you that structure, that organization to build upon. Now, in that, asset protection is a big deal. But here's the thing, guys. Corey, Ryan, there are so many sales pitches out there, influencers and bullshit artists that are overselling asset protection when it's really not is as needed or as complex. And it's just a really an ugly industry. Now, I've written books on asset protection as I feel as a consumer advocate. My first book was Lawyers Are Liars. They call lawyers liars so they can sell their crap. And they're more expensive than me. So I think people need to realize that asset protection isn't the holy grail, it's building wealth and protecting it as we go. And yeah, we got to add some asset protection, but we can always add those bells and whistles down the road. And so I guess I'm sorry, Corey, trying not to take too long here, but the point is asset protection is you kind of build the airplane in the air, while you're flying it. You're going to get out there and make some freaking money. And you may say, well, I don't have many assets to protect. You're protecting your future. Because if you get a lawsuit and you get a judgment against you, I don't have anything. Yeah, but you are going to have something. And when you make it, that person's going to be standing there with their hand out. So you got to have a structure to allow you to platform, scale, and build, but not overdo it at the same time. And we're going to be talking about it. It's not that bad.
No, that's why I asked the question, is because part of me is like, I think a lot of small business owners or business owners in general that or wannabe business owners are like, I don't have all my ducks in a row. I don't have the asset protection. I don't have the LLCs. And it's like, people use that as like a hinge to not start their business. And the reason why I brought it up is like, you can build, you said the airplane, right? Like build the parachute on the way down and still be,
I like the plane idea more than a parachute. I don't know if I want to,
safer.
Now, if I was Tom Cruise in,
Mission Impossible.
maybe. Okay, keep going.
No, I appreciate you saying that. You can. The reason why I asked is like you can add on as you go, and it makes people feel more comfortable because there's probably a lot of people that are listening that heard that trifecta and are like, "Shit, I need to do that." But you don't have to do it prior to starting. It can build on each other. So that's really good info.
So parlaying off this question too is we and this is true for us. I've gotten to the point where we've started the asset protection, but building up upon this, a lot of people, they'll skip over the trust part and they go like, start your LLCs and do all this. And then I've been like, well, don't I need a trust for it to have this thing all funnel back to? And so the reason I ask this is, can you explain what a trust actually is and what it does for you? And then how you maybe reverse engineer, if you already have the LLC set up, how do you get them to flow properly?
You bet. And folks, it is so easy to add the trust to the dinner table when even if you've set a few plates. It's really easy. You can have the trust first. You can start with your S Corp first. You can start with the LLC for your rental first. You can do any of them in any particular order. The goal here is though, just get it organized, get it done. Don't worry about the timeline. But have a commitment to say, I'm going to be organized. People, I know you guys are a little younger than this, but Fill the Dreams with Kevin Costner. Have you guys even seen that? I better ask.
I've seen it. Yeah.
Okay.
Build it, they will come.
You build it, they will come. And you know what? A lot of young people and older people that are retiring, they're like, they just want that wealth to fall in their lap. It's just going to happen. But you have to build something so the divine can bless you with it. You've got to make sure that you're organized so that it can come. And so not beating yourself up and shaming yourself, well, I'm not organized, it's not going to happen, or just being reckless on the other extreme. It's having that well-balanced approach. Hey, I'm going to get there. I'm going to get this organized, and the timeline doesn't matter. So anyway, the trust, a revocable living trust, is the Bible of your estate plan. It's the bedrock of your estate plan. An estate plan is a binder that you can update every 5 or 10 years. If you're single or married or kids or no kids, it'll evolve with you. It's revocable. You remember that revocable living trust. So you can modify it and change it. But if you die, boom, it's in stone. And there's no court, no lawyers. It's just, here's how I want the few things I have to be liquidated or go. And if you have children, you're like, well, I don't have anything. You have kids? Who's going to raise your kids? Oh, I don't have anything, but I have life insurance. Really? Who's going to get your life insurance? You want to really jump at 500 grand on a 18-year-old's lap? That'd be a great idea. So the estate plan is the way to leave that legacy in an organized way, avoiding courts, avoiding the IRS. And the revocable living trust is about a 30-page document. And it's got next to it, your will, next to it, a power of attorney for healthcare, a power of attorney for finances, pull the plug if I'm a vegetable, where do I want my crypto to go? Where's all my keys? Where's my real estate? And it owns your LLCs. It owns all of your companies. It's the beneficiary of your retirement accounts. And everything. So that it's the receptacle. It's the bucket that you're building. And you should be able to get, our average price is $2,000. Don't spend more than $2,000, people. Now don't knock it out at Staples for $500, but don't go get sucked in with some lawyer for $5,000. So you can be very, very affordable and updated very easily every 5 or 10 years.
What would be the difference then, Mark, between the trust and a holding company? And I asked the question because we just set up holding companies for our a business to pay our holding company, and then the holding companies to pay ourselves personally. And it sounds like there's a big difference between a trust and a holding company. I'm curious if you could like clear that up. I'm genuinely asking because we just did it.
Yeah. Buckle up, don't cry. No, I think you probably
holding company doesn't mean we screwed up. Alert, we screwed up.
No, I'm not saying that. I'm not saying that yet. Okay. I think we need to deal with, and I know this is a podcast. I wish we could be in front of a big whiteboard, but everyone visualize this. I wasn't kidding. It is a 3-legged stool. The base is your trust. So then I want that trust to go up onto the 2 sides. Right. Again, the left side being operations, the right side being assets. Now stick with me. So if the base is your trust, okay, done, boom, that's your 1040, it's your bank account, clean. If I'm going up onto the right side over to my assets, think, oh, holding company. It's going to hold things. It's going to own other LLCs. It's going to own rentals. It might own syndications. It might own crypto. It might own oil and gas or notes. It's not going to do business. There's no payroll coming out of it. There's nothing. It's a holding company. It's for asset protection, structure, relationships with partners. Okay. That's a holding company. It's not paying you. It's going to create passive income. That's a holding company. The left side is your operations. That's my contractor, realtor, dentist, doctor, engineer, influencer, online marketer. That is your S corporations. If you're making more than 50K, that's an S Corp. It's not a holding company. It doesn't hold shit. It's a freaking operational company. It's your parent operating company. So Corey, you're going to have your own S Corp operational parent, and Ryan's going to have his S Corp. Those two are going to partner with an operating LLC that might develop real estate, flip homes, sell crap, own a restaurant, whatever. I only have one S Corp in my life. That doesn't hold things. It's my parent for operations. That's where I take my salary. That's where I pay my kids. I have a board of directors. I might do a solo 401k. All those kick-ass strategies, those happen on the left in operations. Now, who owns that S Corp? My trust. See, my trust owns the S Corp. My trust owns the holding company over on the right. So it all funnels down, but that, and I'll wrap this up, in the operations side, those S Corps don't own assets. They might own my laptop or a computer or a cell phone. That's it. Sue me. You can have it. It's a shell. There's nothing there. That's where we do the tax planning. I have a feeling you're calling that a holding company. I would not use that word for that side. That's your operational S Corp. I have one S Corp. It may own 10 different companies. You call me up and go, hey, Mark, let's go do a condo conversion in Miami. Okay, that's going to create ordinary income. I'm not going to hold it for the long term. I'm not going to partner. My S Corp's going to partner. So my S Corp partners with you guys. So I got Corey's S Corp, my S Corp, Ryan's S Corp. Boom, we go do a deal.
Got it. Okay. Makes perfect sense.
Help?
Yes. Yeah, it did. And we created the holding companies, but we're not using operational expenses and stuff out of that. So it's not as messy as I think I made it sound.
I think we're on to, we have it pretty much structured appropriately. We just need the trust, and then we need the S Corp. Because right now we're just kind of operating as, Corey and Ryan, and, some of the different businesses we're kind of treating those as the operational accounts. I don't know if we have the left side versus the right side split. You know what I mean?
Yeah. And Ryan, you're being very transparent. I love it, guys. And this is why people love my YouTube and my podcast as well, because I'm transparent. I've been on a payment plan with the IRS 10 years ago. I've made mistakes. I've gotten into a debt snowball. I bought a great rental and jacked it up. And then I bought a lot of great things and killed it. And did this with the business and did it. So I appreciate your transparency. And let me wrap it up with this example. A realtor. We get it. Realtor's easy schmeezy. Realtor's out making commissions. Fix and flipper. Contractor. Okay. We're in a real estate industry. That is an S Corp. It should never, ever, ever do business out of any LLC that owns a rental, ever. We don't commingle those, because if you get in a problem doing construction, what are they going to sue? Your LLC. What's it own? A rental. Gone. See, that's why asset protection is so effing simple. Just do assets in one entity and leave it freaking alone. Then come over to your S Corp, and that's where you do your flips, your rehabs, your wholesales, your construction, your realtor commissions. That is an LLC taxes in S Corp or an Inc. right out of the gate all day long. And I'll save you thousands in taxes. That's the tax planning side.
So, Mark, active income on that left side, and then passive income on the right side. That's right. There we go.
Right.
He makes taxes sound not boring.
I told you, I told you, dude.
We've had a lot of conversations. Right? We had a lot of conversations with people who work in the tax thing, and like halfway through the interview, I'm like, oh, what'd you say? I'm falling asleep.
Wakes back up.
Yeah. Oh, I know. It's miserable. Well, that's what I'm doing now. Anybody that's an accountant that may be listening, you guys may know this. My biggest project that I've been involved in the last 2 years is I launched my Main Street Tax Pro certification. I am now certifying accountants around the country, CPAs, enrolled agents, lawyers, that just are like, you don't learn this in school. You don't learn it in the CPA exam, the lawyer exam. And so many accountants have a stick up their butt, too conservative, and we need to be in a common language of making it simple and kicking ass. And so now I have over 600 just in 2 years, accountants and enrolled agents, CPAs around the country that you can hire. I don't make any money when you hire them. That's your relationship, but I'm going to make them sure they're speaking Mark Kohler. They meet with me weekly. They go through 80 courses and exams. Anyway, that's the Main Street Tax Pro program, but that's there to help so many of your followers have success. Like they're looking for that accountant. Where do you find them? Oh, I want someone that speaks Mark Kohler. MainStreetTaxPro.com. Bam.
Well, I'm glad you brought that up, and we do not want to move. We've had 3 different CPAs in 3 years, so we finally found. I think at least we're gonna stick with it for a little bit, but it's like maybe like one more year.
Yeah, when your book's open.
But the reason why I bring it up is because it is really hard to find somebody who maybe can tailor their have enough of a business that runs the way they want to, but also tailor it to the needs of their specific employee, because everyone does it different. And I swear to God, I learn a new thing about taxes every single year. And it's not my job to learn it, but I'm like, wow, I didn't know this. My last CPA didn't talk about this. This one talks about that. And so long story short, this year we did well. We saved it more than I thought we were going to. So it ended up working out. But if you're listening to this episode, Mark has over 400,000 subscribers on YouTube. And I think that's the most valuable way we put our podcast on YouTube, but that's the most valuable way to get the content that you can take notes on, because there's whiteboards. It's really, really good stuff. And Rye showed me a video the other day. And so tune into that for sure. If
you need the real breakdown of the trifecta, that's on there too. Just type in Mark Kohler trifecta. We'll link it. I'll find it. Trust me. It'll be in the notes, but it's important.
I have
Can I add something if I could before you comment, Ryan? Corey said something very interesting. And I think it's okay. I'm going to say it this way though. Corey, everybody listen to what he said. He goes, hey, I learn something new every year, but it's not my job. That's my accountant's job. Something like that effect. I would take a little issue and say this, Corey, you are the captain of your ship. Your first, second mate, third mate, lieutenant, whatever, one of them is going to be a legal person. One's going to be a finance person. One of them is going to be this. One of them is going to be the tax person. And you've got to know enough to know if they know what the hell they're doing. And it doesn't mean you have to drive the ship. It doesn't mean you have to do all their duties, and you're not going to prepare your own tax return. Being able to know, hey, I know Mark Kohler's 30 ultimate tax guide. Are we paying our kids? Are we writing off this? Are we doing the Augusta rule? Are we paying off? Am I getting real estate professional? Am I doing material participation? It's not that hard. I have a 3-day event in June. I have half of the event as business owners just saying, I want to know enough so I can manage my people. And you're a captain in your ship. And so people, if you're trying to just find the right accountant so you can forget about it, that's wrong. That's wrong. You want to know, and I'm saying you are, Corey.
No, I appreciate you calling me out, because I think it is important. Like it's kind of one of those things where it's like managing your property manager, right? Like you still own the property. Like they're not going to do everything. And we have a short-term rental, and this happened this week, and I'm like, all the landscaping was removed from the backyard, and like, well, you told me to do this, and I'm like, shit, this is my fault. Like this is my fault because I didn't manage the manager, right? So no, I appreciate you saying that, and you're right. It's at the end of the day, it's all about extreme ownership. Like you have to. We probably were not paying enough attention in certain aspects, and we're thinking that we're going to get this full service done for you thing. It's like, well, they don't know your situation if you don't explain it fully to them. So thank you for calling me out.
Thank you. And Ryan, this is why Ryan was like, and thank you, Ryan, for reaching out to me. I know you were like throwing a Hail Mary and like, here I am, and I'm loving being here with you. Is Ryan's like, hey, I've been learning this. And that's so important but he's like, you make it palatable. I can understand it. And it's fun. I have all sorts of dumb jokes and, let's whatever. So if you, as a business owner, once you find that voice that it makes sense. And then you're like, okay, cool. I know the top 20 strategies. I know enough to be dangerous. And if I ask my accountant a question on one of those and they look like a deer in headlights, I got the wrong accountant. And you guys can do this, and you're already doing it, Ryan, by just consuming my channel. And so come out to our events and watch them virtually, and you'll be amazed and find out my accountant is a dipshit, or you'll be like, oh, my accountant's a rock star. You don't know.
Yeah. And you can, the interesting part is you literally can save thousands, if not hundreds of thousands in your lifetime by having the right person, but also by peeling back the layers on your business, actually caring about it, not just it's the cookie cutter just pay as you go and like, oh, okay, hopefully it just this magic rabbit is pulled out of the hat. And I hope I don't have to owe this year, or I hope I owe less. So I appreciate everything that you brought up. I think there's 2 things that are sticking out that I wanted to bring up. Like we've been pushed away from an S Corp in the past. And I want to talk about that in general. Like we were told, hey, you need to make X amount of money before you start an S Corp for X reason. I don't remember the reason. You mentioned an Inc. Can you just talk about that side of that bucket for now? Because we were at the mindset of like, oh, wait, we're not quite there. We haven't graduated to be an S
so you're not making more than 40 grand a year? Okay, I'm sorry, guys. If you're literally living in poverty, then I guess you shouldn't be an S Corp.
Let me ask you this, Mark.
That's the line. That's the line.
From W2, does that include W2 income and real estate and everything? Like,
okay. All right. Let's break it down. Okay. Now, by the way, I'm going to answer your other question here before we're out. How many LLCs do I need for a rental property? Okay. We're rental properties. We're going to come there. Okay. So now the S Corp. This is so simple, people. You're going to love this. I'm so glad I'm here with your listeners. Let's say I'm a landscaper. You talked about your landscape. I'm a landscaper. I bring in 150 grand, 200 grand. I got a crew and I net 50 to 75 grand. I'm just getting started. I could be a realtor, a contractor, fix-it flipper. Now that's not rental income. That's not rent. That's passive. I'm saying on your active side, I'm like killing it. Yep. If you have a day job, that's separate too. Some people have a day job. My spouse has a day job. Cool. Put that over here. And then, oh, you got rental property? Okay. Put that over here. What are you doing to make more money, to build wealth, to invest? That's your active ordinary income. Okay. Whatever that is. Okay. We're going to have gross, like this landscaper making 200K, then expenses of 125, they net 75. Okay. So I've got 75 grand. I'm going to pay self-employment tax of 15.3% if I just run it through an LLC. That's 10 grand. Then I pay Fed and state. So the FICA, the F word, what the FICA? I hate FICA. FICA is going to be on every net dollar of active income, period. 15.3% up to 168 grand. Then it goes down to 2 point whatever for another 50. Then it's up to 3.9. It just adds up. And so the plan is if you're netting more than 50, you're an S Corp candidate, but I'm going to just use this example. So the landscaper brings in 200, spends 125, net 75. They're going to pay 10 grand in self-employment tax. Oh, and then their smart accountant goes, oh, you should be an S Corp. We're going to do an S election. By the way, it's super expensive. We charge $250. So super expensive. So you make your S election on your LLC. Your name stays the same. Your EIN stays the same. Your bank account stays the same. You still make 75 grand. But now we're going to split that 75 into 25 grand payroll and 50 grand K1. So now I got a W-2. I'm like wet dream to a banker. I got my W-2. I'm cranking and I got this K1 pass through. Now that's not rental income. That's my active. I've split it. I bifurcated it. So now I have 25K in salary, 50K in net income. I'm still going to pay overall income tax on 75. I made 75, but I'm only paying the FICA, that terrible 15% on the salary, the 25. So anybody that is making more than 50 grand, I'm going to do a 50-50 split there, 25-25. But if you're making more than 50 grand in your operational business, you should have been an S corporation yesterday. And I'm going to save you thousands. Right in that example, you don't pay FICA on the 50, that's $7,500. You want to save $7,500? Make an S election. Done.
S election, can that be a traditional LLC and you're just making an S election, or do you have to you have to start a new LLC? No, it's done. One form, done. Got it. Now, if you two are partners in an LLC, I am not going to make an S election. If you two are partners in an LLC, no S election. Your LLC, Ryan, is going to be an S Corp. And Corey's S Corp LLC are going to partner in your project. Because if you call me up and go, hey, Mark, we got this killer deal. We're going to like freaking open a restaurant. We're going to kill it. I'm like, great, I'm in. Let me tell you my S Corp name. My S Corp's in it. Because anything that's active, my S Corp's going to own it. So each of you have your own parent S Corp. And that's going to partner in every effing deal you do. But you're only going to have one S Corp. That's it. Let me hit you with this one. I'm going to give you a structure. We're starting a coaching program. Great. Yep. Corey and Ryan running it together. And we also have real estate on the side, a bunch of other LLCs where we're 50-50. And we can talk about
not rentals. You're just saying operational LLCs. We're all on the operation side.
So I kind of muddied the waters there. On the right-hand side, no muddying. Sorry. On the right-hand side, we have a bunch of LLCs where we co-own real estate.
Rentals.
Rentals.
Okay, cool.
Yes, sir.
That's over here. Love it.
Yep. Okay. Other side, we currently do not. We have one LLC. I won't say the name of it, and that's our operational account for now. It's not an S corp, and we don't have each of our own S corps. We basically will funnel money that we collect from operational activities into this LLC, and then we pay each other. Right? That's or we pay our holding company, and then we pay ourselves. That's what we're doing.
Pay your holding companies.
We have not done that. No, we pay ourselves personally through that. Yeah.
Oh, okay. You don't.
We were told to do a pass through the holding companies somehow. Am I saying that wrong?
No, we were told, we haven't done that, but we were told to do a pass through the holding companies. We just we have a holding company set up, but we have not been paying. We have not been paying the holding company and paying ourselves. We're taking the operational expenses and paying ourselves.
Okay. Now, and I was just say, and Ryan, we're going to go back to your example, but let's use the right term. So Ryan says, hey, we got one LLC that we do all of our operations together. We're partners. Love it. You're killing it. You're making money. We won't share the net. We can do some examples from that. But then you're never going to pay a holding company. Remember, holding companies are over here. Holding companies own our rentals. Holding companies own assets. We would never, ever, ever, ever pay a holding company. We're going to pay your personal parent S corp. That's not a holding company. That's your operational S corp. So start using that terminology, and you're going to make so much more sense with your professionals that you work with, whether they're insurance agents, CPAs, attorneys, because holding company means holding. Operations means operations. So anyway, so back to your example, you have one LLC, you're killing it together. Oh, and we're going to add coaching to the mix, another project. Keep going.
That's so that's perfect. We have the LLC currently. We're going to add coaching to the mix. Funneling that down, are you now saying, hey, Ryan, open a not holding an S corp, Corey S corp, and then we co-run that through so that this the LLC is going to be owned by Corey and Ryan's S corps?
Yeah. Now, by the way, I know you post this on YouTube as well.
Yes.
Okay. And I don't know your percentage of listeners via YouTube versus podcast, but I'm going to say this right now, everybody. I'm going to draw this out. It's going to blow your mind. And if you're listening on the podcast, get over to their effing YouTube channel, subscribe, hit the bell icon, and you're going to get a more impactful experience to go rewatch this with this whiteboard, at least this section. So and I know some of you are all podcasters, but sometimes you need to see it. A picture says 1,000 words. Okay, whiteboard, boom. So here's our trifecta. And we've got our trust down here. Now I'm going to make this, let's do it, Ryan. This is Ryan's trifecta. So here's Ryan down at the bottom. He's the trustee and beneficiary of his RLT, okay? Revocable Living Trust. This is his 1040. This is where he's going to report all of his income. So this is his base. Over here, let's say these guys have a couple LLCs. Boom, boom. And Ryan owns 50% of this one, 50% of this one. And then Corey's over here with his little trust, RLT, 50%. 50%. See that? So we've got these LLCs. We could pay, this is our STR, short-term rentals. These are LTRs, long-term rentals. 2 LLCs, 2 buckets of rentals. Done. Easy. Boom, boom. Now, if you want to add holding companies, that's next level. I would put a holding company here for you, Ryan, and that's where we're going to use Cope entities, Wyoming, maybe, all sorts of buckets. This creates a holding company for you. That's a holding company. These are your rental LLCs because you have partners. You have your own holding company. This is your holding company 100%. That's what you'd have here. I'm sorry, I was trying to erase that. Okay, now, over here, you're going to love this. Boom. Ryan has his own S corp. We could set up as an LLC and do an S election or do an Inc. and an S election. Doesn't matter. I charge the same. We charge the same. You could claim it. Ryan International Enterprises Inc. Boom. Don't care. Whatever you want to call it. Okay.
Sounds catchy. Yep.
All right. Then and then over here on the side, oh, guess what's going on over here? Corey has his own little S corp going on. All right. Okay. But this is your trifecta. So now, oh, we're going to have an LLC for fix and flips. Oh, we're going to do an LLC for coaching. Oh, we're going to do an LLC for a little coffee shop. Okay, cool. You own 50% of this, 50% of that. And are you going to give Corey 50%?
Yes, sir.
You are? Okay.
Yeah.
Right. He called me up earlier and said, if you do a diagram, screw him over. So I think he said 60-40.
Okay, yeah.
Is that what you wanted, 60-40?
Yeah, we haven't talked about that yet, but thank you for bringing it up on air.
All right. So 50-50, but look at this. Corey's S Corp owns 50%. And your S Corp Ryan, is owning 50% of every operational idea you ever freaking get. And it funnels in here, funnels in here, funnels in here. It's pass through. These are all pass through. Yeah. They pass through, not to you, but to your S Corp. Then here's where we do our W-2. Let's say that all these operations this year, hey, it goes well. You make 300 grand. You make 300 grand net. And over here, Corey makes 300 grand net. Oh, that's awesome. Now I'm going to do payroll of maybe 80, push through 220. Then I'm going to do your own board of directors. We're going to write off your trip to the Caribbean. We're going to write off your new truck. We're going to write off the kids. We're going to set up a solo 401k. Well, cool. Corey doesn't have to be a part of any of that. You're going to over here just cranking out tax write-offs that are unique to you. Over here, Corey's doing his own thing. You know, he's like, oh, I'm going to do this. I'm going to write that off. I'm going to do this. I'm going to take a different salary. I'm trying to qualify for a loan. Blah, 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 blah. So Corey's got his world over here, but this is your parent S Corp for everything you effing do.
Dude,
how much? Take my money.
Like, that's what I'm saying, dude. I threw the Hail Mary for a good freaking reason, dude.
I know. Like, I feel like I have to blow up our whole shit.
We do. I mean, we're going. Maybe not right now, but we can take pieces. Mark, with that, let me ask you one thing, because, and this is, I'm not trying to muddy the waters, but say we already have the LLCs established, not the S Corps. I'm talking about the right side that you just showed us.
Okay.
Is there a way to change ownership, or like, you know, say we establish a holding company, we want to change the ownership of the LLCs to the holding company for the protection. You know, rather than do you have to start a new LLC for things, or are you able to change ownership to solidify the protection, or like have for example, the trust own the LLC?
Okay. Well, this is going to be good. Now, this is where we start breaching a little attorney-client privilege. Whiteboard again. Okay. So let's say Ryan goes, and I think what you've been alluding to here is you have your own little holding company that you own 100% of right now. Would that be fair to say?
Yes.
You've got one sitting over there. Mm-hmm. Has it been in effect for 2024? Did you set it up last year?
I think we set it up in January of this year.
Love it. Okay. That's golden. That's golden. You have no idea. So, and does this little holding company of yours that's sitting over here kind of in no man's land?
Does nothing right now. It's doing nothing.
It doesn't own a rental or anything.
Nothing.
Oh, dude, I'm saving you some bank here. We're going to take this as, by the way, you said, is it hard to change ownership? No, I just do a membership transfer agreement. It's called an MTA. I have paralegals that are knock them out for $200-300. Get on the phone, boom, boom, boom. Wow. So we're going to change the ownership of this LLC to your trust. And then guess where we're going to move this LLC? We're going to take it across the road. It's now your parent S Corp, and I can backdate it to an S Corp 1/1/24. So now you've got an S Corp for the whole year and you didn't even know it. Checks
in the mail, Mark. Checks in the mail.
So this little LLC has been playing in the wrong playground. We're going to like, whoa. You're going to come over here and guess what? You got a new job. You're now my parent S Corp. We do an S election, change the ownership to the trust. This goes away. Now it's up here. You're off to the races. Legal fees to just change the own. Now I'm assuming you've got a good LLC and an operating agreement. If we have to clean it up further, whatever. But to do an S election and change ownership, $500-600. Paralegals.
You're just demystifying so much BS out there, Mark, and I appreciate it, because there's, you can't do this. You can do this. Like, I knew you were gonna have the answer. I didn't know I was gonna get this free mini course, the master class from you. So I seriously, truly appreciate it. I know we're kind of come to the end of this. I know you have to jump here. Question for you. People are going to want to have a piece of this. And I know you mentioned that you have a lot of people that you've trained in Mark Kohler language. Where, again, can people find those people?
Thank you so much for asking, because you're right. We're coming up on the end of this. And I know, well, I'll be helping you guys out. We'll get this figured out. First, we have a law firm. A kick-ass law firm. 14 lawyers of mine, personally trained by me, meet with me every week. Some have been with me for 10 years. Very affordable. Setting up an LLC with a consult with your trifecta on a phone call for an hour to 2 hours, building your plan, $1,500, $1,700. That's it. So you call KKOSlawyers.com, KKOSlawyers.com. Anybody around the country, any state, can get on a Zoom call with one of my kick-ass lawyers, male or female, young or old, and say, build my trifecta, let's set up an entity. Or build my trifecta and do a trust. Or give me a price for a trust, LLC, and a trifecta. We have all that. The team members will put you in the right bucket. We want to build a relationship that's affordable. Done. Okay, that's step one. Get an effing plan. Build your field of dreams. Get ready for the rain. Be ready for the wealth because you're going to have that structure to manifest it. You know where it's going to go. You're organized. You're kicking ass and you're ready for it. And you're captaining your ship.
Mark, are there any brick walls in your studio? Is anybody else running through them right now? We got one behind us. I'm ready to.
I feel like, dude, just set me up next Mark all day, and I'm juiced.
We have a few minutes left, and I want to let Mark go. But if you're listening to this podcast, we've talked a lot about on other shows. We've had CPAs specifically on, so we've talked about depreciation and a lot of like in the weeds real estate stuff. But we have not. This is your episode 210, I believe. Around 210. We have not talked structure. So this is the episode that we're going to refer people back to all the time, to get your structure to make sure that you can save on taxes and run your business effectively. I just want to thank you for your time. This has been awesome. I know we dove into ours specifically, but I hope people can take and put their own spin on it. If you're driving, it might be tough, but like listen to it on YouTube, go see the whiteboard. I think it'll paint a really nice picture for everyone that's tuned in.
Thank you so much. And I'll say this, step 2, thank you for saying that. Step 2 is now we got to add the accountant to the mix. Who's going to do the books? Who's going to do the payroll? Who's going to do the tax return? Who's going to implement this throughout the year without having to call the lawyer? And we love that. So we need our freaking quarterback. We are up here as the team owner. We got it structured out. We're ready for the season. Now we need our quarterback to push that ball down the field throughout the year. How about a Main Street tax pro that works with our lawyers whenever needed, speaks Mark Kohler, and can build the own damn trifecta that gets it. Trained on 80 Mark Kohler strategies, certified, tests, finals, has to come to my workshops, train with me. That's step 2. And you get to find the one that speaks to you. Young or old, male or female, blah, blah. I don't care if they're in your backyard or not. They just need to know what the hell you're doing. That's over at markjkohler.com or mainstreettaxpro.com. It just, we'll make sure the links are there, but just Google Main Street Tax Pro and you'll get to the page where you can just like a LinkedIn page. You just go through, find the one that speaks to you. I have ones that speak Spanish, some that handle Canadians, some that do restaurants only, farming, whatever you're, dude, let's find it. So that's the tax pro. Add the tax pro to the mix and then just meet with them regularly, quarterly or annually. You're going to kill it.
Love it, man. You can tell when people are really passionate about what they do. It kind of bleeds through, especially when you're listening to it on a pod or watching it. If anybody's watching this, you can tell that there's just so much passion behind it. It's not just a job or even a career to you. It's like, it really is, like, you can tell it's your life. And that's why we do the podcast, to talk with people who are passionate about what they do. So I want to thank you for coming on. This has been an honor. Rye's been bugging me about getting you on for a long time, and we almost blew it today.
Really technical difficulties. We made it though.
We made this thing. We made it.
So it's an honor to be here. Seriously. Yeah. Thanks, guys, so much.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.